A trading strategy is simply a systematic plan for buying and selling assets. It helps remove emotion from your financial decisions. At its core, a strategy provides the rules for when to enter a position and, more importantly, when to exit. Research shows that most retail traders struggle with consistency, often because they lack a clear, repeatable set of rules. Every sound strategy includes entry signals, strict risk management, and predefined exit points to protect your capital. It is important to distinguish between active trading strategies and passive investing, which focuses on long-term wealth accumulation rather than short-term gains. High turnover strategies often see lower net returns due to taxes and trading fees, which can eat into your profit margins over time. Remember the old saying, plan your trade and trade your plan. Consistency is usually more valuable than trying to time the market perfectly. Always test your strategies in a simulation before using real capital. Thanks for watching, and subscribe for more finance basics.